Hello and welcome everyone to another weekly market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hey guys, good to see you again.
Yes, it's good to see you as well. For everyone else, as you can tell, Freddy and myself are still working from home, like most of us. But we are hearing a lot of good news about vaccines, and I know Freddy has a couple things to talk about that, as well as a lot of developments over the last week. I think it's probably one of the weeks, Freddy, that we, for the first time again, that we have almost too much news to cover today. But I think we're trying to tackle it as quick as possible. Right. With that being said, Freddy, I think let's start with the biggest, or at least the most polarizing topic of the last 4 or 5 days, right? And especially over the weekend, TikTok. Lots of talk over the weekend that Donald Trump will ban it, right? Then Microsoft came into the equation. Can you tell the listeners a little bit more of, first of all, like what's going on there in general? And then also, this is a bigger thing, right? In the China-US fighting right now.
Yes, so Trump gets busy again and bans TikTok on grounds of national security threats. And it's not exactly groundless because, apps all collect personal information about people. And in this case, the people are American citizens. So it makes it easy to actually make a case for it. But, what TikTok is doing is what Facebook would have done, what Google has been doing, right? It's just a standard thing to optimize your user interaction. So either case, it makes a ground for that. And now Pompeo actually went ahead and say, this is just the beginning because we could widen this sort of thing with more Chinese companies in the US. So I hope that just rhetoric because it has created enough fuss for now. Microsoft is in the bid, and God knows how Microsoft is going to come up with the right price for such a complex deal. And that will satisfy the Chinese governments and the US governments because already the Chinese government say this is not going to be a smash and grab for TikTok on the cheap, right? I mean,
Trump says he wants some kind of tax on this, right? So it's going to be like, how is Microsoft going to be making anyone happy here? I think this is probably a minefield for them to step into, right?
Yes, and you already seen Bill Gates came up and say, "Wow, the data will be safe in Microsoft's hands." So I think he's gladly taking the challenge. It is an opportunity for Microsoft after LinkedIn, and in this case, it could be a cheap price, right? But the thing is that how much Chinese government would come in to interfere, we do not know what's going to happen. So it's going to make for a lot of fun going forward, but it's not fun for TikTok.
No, it's not fun for TikTok at all. I saw some messages that the CEO sent as well. So yes, not fun at all. But that's one of the big topics, right? The next one is obviously, stimulus checks running out. We have more lockdowns, in Australia as well, right? Melbourne completely locked down, even with a curfew at night. US states still not seeing any relief. Where do you see the relief packages we discussed a couple of weeks ago? Is there any updates on those, or?
Well, for one, the way market looks at it is going to be different from you and I, the average person on the street. Market looks at rate of change. And in this case, the fact that after a lot of dissent, the fact that Nancy Pelosi on the Democrat side is willing to now go into another discussion with Steve Mnuchin, all right, from the White House, in this case, makes for progress. And the market likes that, right? So sort of people are starting to talk about having some sort of a virus relief bill finalized by the end of the week. I don't know what it's going to look like because Democrats floated $3.5 trillion package. Republicans, $1 trillion. Republicans wanted liabilities protection for companies and institutions. Democrats did not want that. It's just a wide rift. But as we all know from the European politics as well, they would always have a deal towards the end, towards the last witching hour. So I think that's what the market is sort of getting used to, and hopefully it's not wrong.
Yes, no. I think this is again what I want to come to the next point actually that you and I have talked about before, right? So obviously the S&P, Nasdaq, right? Markets are reaching new highs, or like they're very positive again, right? On a very positive streak. What you already alluded this, right? What do the traders / the market, what are they seeing that maybe we don't, right? Is there any secondary effect or that they're pricing in that, the rest of the population who is worried about their jobs, worried about, the next paycheck coming in, that we're not aware of?
Well, it's psychological, right? As normal people suffering from the pandemic, looking at friends suffer, like who contracted it, that's a huge deal emotionally, isn't it? Or you're getting fired from a job, or getting pay cuts because your company is caught in those sectors that's directly in hospitality, tourism, and what have you, or airlines, right? So you would not feel the delta, the rate of improvement, right? The marginal change. But what the market operates on is it focuses on the rate of change. And in this case, there are improvement. And even in the horrible situation in the US, we've seen the US national aggregate numbers, daily new infections numbers, starting to come down for the first time in a long time. So that has given a lot of focus for market participants, right? And especially people looked at the worst places, the Sun Belt places, right? Your California, Florida, and all. And those numbers have starting to really, really come down. So that's what the market likes.
Yes, no, I see. It's hard to see for everyone, right? But yes, even those little changes that are positive, right? They do get priced in. Yes. I know for the listeners, you had a fun fact, right? And I know you wanted to share it. So go ahead. I'll let you share it.
Well, we used to talk about the first $1 trillion company, and Apple has done that a while back. I don't exactly remember the date.
But Apple, that long ago that we talked about this.
Sorry?
It's not that long ago that we talked about this, I remember.
It's about a year ago, a year and a half ago. And now Apple is on track to become $2 trillion. To be precise, as of last night, is 1.8755 trillion. So, and it actually has a whooping 6.5% market share in the S&P 500.
Yes, so I think a good question for our listeners is, hey, when is it going to break 2 trillion, right? I think let's put it in the comments, everyone. Let's tell us your prediction of that, and Freddy and I will pick you out in one of our next when it's time for them to be breaking that 2 trillion. Freddy, so we talked about the market, right? It's moving up, right? You said there's some secondary data items that do that, right? But a lot of people are not understanding if the market is so positive, right? So we're going up, especially tech side, other sectors as well now. Why then has gold surged already past 2000, right? And what does it mean that outperforms? Isn't that like contradictory? Like, shouldn't gold only go up when the market is bad, right? So can you maybe give your opinion on that?
Well, yes, stocks is up and gold is up. What is going on? Who is right? Who is wrong, right? But the thing is that by asking this question, we sort of have a fixated mindset on what gold and stock should be, inverse. And that is not true. What gold, because it's not often that they're always negatively related, right? And the key reason is that we are in a world of unprecedented times, and we have massive, unseen before amount of money printing, right? So what gold is doing is actually outperforming because there's a sense that paper money is being diluted. So that risk is not on the market, not on the stock market. The risk is on paper money. And paper money in any denominations, US dollar, euro, Sing dollars, anything that's paper, that's not backed by precious metals, right? They are being thought of as risky because of dilution, right? And what gold is reflecting is the act of the Federal Reserves and other central banks, massive stimulus. And it's nothing to do with what gold is saying about stocks. It's not saying anything about stocks. That's my personal opinion.
I think it's a good personal opinion. I think there's also a fun fact. I was just trying to find it again, but there's a fun fact. I think the combined gold ETFs, right, are now in second place on most gold holdings, just behind the United States. They just overtook Germany So also a great fun fact, and it also coincides with this because you see a lot of people using these gold-backed ETFs, right, to get that exposure compared to the actual bullion, right? Especially with that when they had the supply issues during the lockdown, right? Especially in those parts like Switzerland, for example. All right, well, great, Freddy. Let's move on. Last question from the audience. Wang Chimon, he was asking, what are your thoughts, Freddy, on the Malaysian glove market? Right, obviously there was some, thousands of % up, right? Some of these players. One of the guys is now the richest person in Malaysia, or second richest person, I think, over the last 6 months, right? So where do you see that market heading, or in this sector?
Well, Malaysia as a whole controls 65% of the world's market in rubber gloves. And it's actually because it is also a producer of rubber itself, right? Exporter of rubber. So rubber gloves as an extension, huge market share. And stocks like Comfort Glove and Top Glove, these two companies have gone up like 6.7 times for Comfort, and Top Glove was easily 5 times, actually nearly 6 times. So these are humongous numbers. Even when you think about it, right? I'm not talking about looking at the price and how many years of earnings the prices are covering. I'm talking about, let's look at the price and look at how many years of forward earnings that analysts are expecting, given the pandemic. The revised estimates, analysts have their own homework, fundamental analysis. I can tell you this, based on Bloomberg data, I'm seeing 40.5 years of forward earnings priced in by for Comfort, and I'm seeing 21.5 years. Right. So I don't know what the future is going to be, but these earnings are aggressively priced in, which makes them vulnerable to volatility in the future. Just think about a situation where the vaccine is suddenly showing huge progress, is going to the next stage, and the distribution of the vaccine, right? Nations are procuring it, and let's say that process was better than we expect today. And and what would that do to the demand for rubber glove? And hence, a reversal of fortune can easily take place. So they may work very well because of the pandemic, but they are going to be high beta, meaning volatile names that's very aggressive on this particular team. So buyer beware. It's always about having a certain right allocation of your portfolio into something that you believed in, but it's not about having 100% of all you have and borrow money to invest with it. That makes it worse. So the discipline remains the same. Don't forget those.
Exactly. It's very, very important to have the discipline. Also rebalance, right? Hey, if you were early in these glove makers, right, and you made some money, just take some of the profits off the table, put them in a more diversified portfolio, and keep a little bit, right, if you want to let it run. But that's fine. Good. Thanks, Freddy. Thanks, Wang Chi-moon. Great question, I think. Especially, a lot of people probably were wondering this as well. For anyone else who wants their question featured on here, always feel free to put those in the comment section below the video. I also have a couple upcoming webinars to talk about. So the first one is actually going to be done by Freddy himself. It's on Wednesday, the 19th of August at 7 p.m. for our Singapore audience. It's called a deep dive on our asset allocation framework. So Freddy will be talking about that. If you want to sign up, there are links in the show notes. There's also links on our website to sign up as well. And for our Malaysian audience, we have a seminar called How to Invest the Right Way with ETFs. That's going to be on Thursday, the 13th of August at 6 p.m. So if you are interested in either of them, again, links are in the show notes or on our websites as well. Freddy, thank you so much.
My pleasure.
Looking forward to hearing some answers from the listeners on the $2 trillion question. And we'll be with you again next week, okay? Talk to you soon. Bye-bye.
Ciao.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.